Hello, everyone. I hope that you had a wonderful weekend and, a good Monday, right? Today we had, some setups, forming in the market, which were high probability, but it's just that, we haven't, thought about those as yet, which, we'll get into. Yesterday, I opted not to do the live stream due to the fact that we had no high impact news events. But we do have hyper news events, on every single day, after today, which is Monday. So we have on the screen, you can see, a string of hyper news events. Already we can see that we can expect a major reversal. For some days it will be Wednesday, for some days it will be Thursday, and this is due to the fact that, it will be caused by sequential SMT. That's always what forms the higher the low of the week, 90% of the times. Not 70, not 60. 90% of the time, the high or and the low of the week or high of the week will be formed, with sequential SMT, right? And that is just the base, right? When you go deeper, and some people it's pretty difficult to grasp. Like you need to watch the market for sequential SMT, and then you need to watch the market for intermarket sequential SMT. And I know that it's a lot to take in, but remember that nothing that is actually good, nothing that actually works, is supposed to be easy. Which this is pretty easy if you really look at it, right? You're just waiting for cracking correlations during specific times, right? So already we have Wednesday and Thursday, right, in our crosshairs, right? We know that the higher the low of the week should be formed on one of those days, both days for certain asset classes, right? Meaning that, for example, if we have a cracking correlation between gold and silver, then the low for gold could form on Wednesday, the high, or the low for silver could form on Thursday. And the same thing goes for other asset classes. And the same thing goes if you're looking for intermarket sequential S&T. So we have news event tomorrow, right? Which obviously the procedure for attacking the markets, right? The only time we, up to trade, the only time we, try to do anything at all is when we have a crack in correlation, right? If we have, for example, sequential SMT tomorrow before 10 a.m., we would not expect that, influx, that engineered liquidity, which is entering the market to be, you know, a reason to cause sequential SMT. We will, expect the market to just, go in a straight line as what usually happens with CPI, right? On Wednesday, you can see that we have news in the morning, New York time, which is usually when we always have news, right? And another thing to realize is that New York, right, it forms a loan holiday more times than London does, right? That's what usually happens. You probably have been taught differently, but like if you realize that's really what usually happens. And on Thursday we have 8:30, and then we have 10 a.m. in the morning high impact news events, which will shake the markets a bit, right? And remember, when you see sequential SMT, don't panic. Don't be like, will this work? Will it not work? It doesn't matter if it works or not, really. Just know that it will work more times than it will fail. And usually, if it fails, it's just due to our human errors, right? We're humans. We make mistakes. We overlook certain things. We don't function as how a robot would, which is something that's in the works right now. Then Friday we have 8:30 a.m. And we already know what happens on Friday whenever we have high-impact news events, right? Price usually just returns back within the range, whichever, for example, if price is at, peak highs on Thursday, then we can expect the, Friday's range to fall, So it will come back within the range. And if Thursday or Wednesday, from the low of the week, we could expect Friday to, pump the market, right? That's what Friday does. It just rebalances the market, right? And tries to get close to the true open of the market or the asset class they're looking at as possible. Here you can see that we have the FX triad, FXT. Yeah, that's what I actually call it. So you can see that we're literally just, you know, consolidating at the moment, which is, it's not that, oh, you can't trade a consolidated marketplace. Still, yes, I'm going to give you guys, you know, my bias, what I expect, what I think might happen, right? But right now, it's more difficult, right, than it's ever been in years, right? It's never been like this for a very long time. If you go back and you look, you'll see, right? We've always had these, ranging moves that just go come, but now we've just been literally consolidating for, a few years, right? We haven't been doing much, right? With that being said, in terms of liquidity of the FX triad, the dollar index usually, is more, primed to see its liquidity, drawn to than any other asset class within the triad. And saying that, what I mean to say is that, sorry about that. I just feel like something's in my throat for some reason. So the buy side liquidity here for the US dollar index is prone to be drawn to, right? We're more close to this buy side liquidity here than we are close to any liquidity within, the euro, for example, right? So looking at price right now, right, you can see that we have, this wick right here. And I like to, start with this, what do you call it? Clean press action. So you guys can see before we even, I don't like to just put the lines on the charts and then have that just drawing your attention right away. So here we drop below this low here, and something that's important to understand to see is that when this didn't happen within some other, data providers for the dollar index, right? That's a systematic SMT, right? That's something that is, you know, I wouldn't call it a fluke, but it's more so a mistake, right? Between the data providers, right? Of course, they all get their information from the same, head. That's what I call them for now. The same group of people give them the same, information. But at times you'll see this happen. Whereas, for example, you'll be looking at, Bitcoin. You'll see Kraken make a low on Binance. They'll make a low, for Bitcoin, and then afterwards you'll just see price going higher, right? So here, right? Remember wicks or gaps. So I would consider here to be a gap, right? And right here where you have no bodies of candle, right? ICT taught this as a volume imbalance, right? Where you have just the bodies, right? So for now, here we have liquidity, right? And right now we are not, two-sided, which is what I always say, right? It's do or die, right? It's not, and my go, these highs are, very, what I'm looking at right now. So these are of importance to me. And if you go here to the daily chart, right, you'll see how clean these highs are. And listen, I can, and every time I say this, right, I always say this, whenever I see highs like this, it's basically finished, right? I can't, and where's this on the US dollar, which literally controls every other asset class, right? I can't just see this and be like, okay, I'm gonna short here, run liquidity and aim for no. It doesn't matter, right here. Even though this wick just occurred here, right? These highs are too clean, for me to dismiss them, right? And then here we have this breaker, right? This up close candle which price traded down into, right? And remember quarterly theory, right? It's Monday, so right now we're waiting to see which it has been established the 2 week open, and if we have price fall below the 2 week open, in form SMT, then we could expect some higher prices. Right here, the reason why we have price pulling back like this is due to the fact that we have SMT right here, right between this high and this high. So right here we have the US dollar index take this high out. Here, that didn't happen, right? The euro did not take this low out, and this is normal consolidating market conditions, right? And it's not as high probability as for example, as I would want it to be, right? And mostly due to the fact that we have this, how do I call it, heightened heightened, what do I call it? I don't want to like say something that sounds scary or anything, but the economic fabric of the world is slowly ripping apart. Right, we have a lot of news rumors going around, Russia, China, the US, and personally I don't think that the US is okay. Right, and mentally or and physically, right? The economy is collapsing. The Russian economy is growing. The Chinese economy is growing. North Korea, their economy is growing. And right now we have, which is something that I said a few years back. Was it 2, 3 years? I think it was 2 years ago. Right, I stated that I believe, right, that the relationship between the major countries on the other side of the world, which is the East, China, Russia, North Korea, those countries, their relationships will be getting better, right? And they're realizing that they don't need the U.S., they don't need the U.S. dollar. The U.S. is always just sanctioning them for no reason, you know, just occupying spaces around them. And recently we had the United States, well, they participated in a attack, which killed children in Russia, right? So they're interfering in wars which aren't their wars for some reason, right? So all of those things, now you have Putin saying that the U.S. will pay, and right, they don't really need to touch the U.S., right? They have all the technology to just scramble their communications, you know, pull down, their technology, just floor the economy, basically floor the stock market, floor everything. So that's something to be paying attention to, and I'm being very cautious with my words. I'm trying to think before I say anything, basically. But I believe that the U.S. is in drastic trouble. Anyways, that's that for now. And here you can see that we had a higher time frame sequential SMT than this one right here, right? So here, right, we took this high up, and remember, right, we need, like, these moves are needed to create confusion. So usually you have a higher time frame sequential SMT here. Then when you have a lower time frame sequential SMT here, then basically that's just just price pulling back within the range and consolidating. right? These moves are usually short, you know, term moves, right? Whereas remember, we usually see this, whereas we have a higher time frame, cracking correlation up here, and here this is lower time frame. We usually see this as a, sign that price will, or let me say should, be going lower, right? So we would just, wait for some, type of liquidity pool to form on the lower time frame. We'll wait for that to be purged during the right time, and then we'll wait for, price to reverse, right? So this is usually what sets up the magneto effect, which is, when you have a sequential SMT or, SMT, being put into place by another. So, for example, if we have sequential SMT here, then, sequential SMT here again, somewhere here, wherever it may be, then we could target these lows. Right? And this is just me using the logic that, we alone really know about right here, right? So it's not a level or looking through all this Fibonacci gap right here. No, really, that doesn't really matter. That doesn't matter unless we have sequential SMT. That doesn't matter unless there's a precision swing point. It just doesn't make any sense. It doesn't matter, right? And right here, right, you can see that we had a cracking correlation, right here. There's price traded above this high. Here, price failed to trade above this high. So price just filled this gap right here, right? And we talked about this before, but it's important to talk about it now. Usually, whenever this happens, right? Whenever this happens, and you're looking at your trade, the other move after price takes liquidity right here. So here where we had price take liquidity, right? Price takes liquidity here, it falls, and it creates a gap. The next gap, and we're looking at the daily time frame, so if it's the 4-hour time frame that this occurred on, the same thing would go for that, right? So here we have this gap, right? Price filled it after this gap was filled. And after this gap was filled, no gap formed. We just had consolidation, right? So that's, how the market works, basically, right? So for now, we need one of two things. We need a precision swing point, or, and it could form on the 4-hour time frame or the 1-hour time frame, as long as it is, followed by sequential SMT or intermonthly sequential SMT. So for now, what do I see this as? Just price playing around. What usually causes price to play around like this? Like what causes this type of price action where we just have price going up, down, it will stay within a tight range. It's literally just, sequential SMT forming here. And let me see. It's literally just sequential SMT forming at the top. So, nope, that is not it. So it's like sequential SMT forming here. And here we have what? Sequential SMT again. Then here we have what? Sequential SMT again. And when it falls again, sequential SMT, and that's what keeps price, within a range. Literally, that's what it is. That's what keeps price consolidating, right? And that's what we have right here, right now, which is why we have price pulling back like this. But, I don't take this really, serious due to the fact that we had sequential SMT here of a, higher focal point. And also it's still not, as high probability as we would like to see. Like this right here, this was obvious, right? Looking at the forward time frame, this was, pretty obvious that this would happen. Here we don't have that type of clean price action right here, right? Looking at the British pound, right? We have liquidity above this high and liquidity below this low. I don't consider reversals unless we have, first of all, a precision swing point, and what else? A large range candle like this, which could happen within any of the triads, right? So this usually signifies a reversal. What do I mean? Right here, right, we had a precision swing point, then we had prices drop like really hard. Also, it was on a day, where we had a high impact news event. And high impact news events are needed, for significant price reversals. So without that, you know, to me, this is just nothing of high importance. And then here, we see price chopping around here. When price is reversed, it's not going to chop around like this, right? It's just going to expand, create a gap, fill the gap, then fall. And here, right, you can see that it's not the typical triad that we usually look at, but due to the fact that the Dow is, out of commission, or just doing its own thing for some time now, which is a product of these war rumors and war news that we have happening. Literally we have World War III happening right now, but no one sees it. Like the U.S. is giving Ukraine weapons. China and Russia is saying stop. You need to stop giving them weapons. Like you're literally it's the U.S. attacking Russia. It's the U.S. Fighting the war by giving them weapons. Just think about it. That's what's happening, right? So that's why we're having all of these things occurring within the market. This is the market just reacting perfectly to all of that, all of those news. So here, right, you can see that this is what occurred today, right, which is not something that I participated in, but it's something that follows the rules of our concepts. So here we had a 4-hour time frame gap, right, and it's right here, and it was from the previous quarter, right? So this gap is from the previous quarter of the month, right? This is the last quarter of the month, which is usually not the best, but it is tradable, right? And that's all that we need, right? So here, first of all, it's a precision swing point, which made which would have made this something of importance, right? This right here is a precision swing point, and also if you haven't already, make sure that you switch to the September contract, right, for your indices, right? So you need to be having September 2024 right here. Right, so and it is ESU 2024, MQU 2024, YMU 2024. That's what we're using right now. So anyways, this gap, right, when was it formed? Within the last quarter of the month. Then here we had price trading into this gap. Here price did not trade into this gap. So that by itself is what? That's a SMT fill. So even though we have different SMT fills, which are actually time-based, right? Certain gaps that get filled, from price action of another quarter, while it was formed in a certain quarter, which is something that we'll talk about this week, Wednesday, right? This, doesn't need to follow any, for it to be effective. Of course, it needs to follow a sequence to be very precise. But for it to be effective, The only thing that you need after price fills in this gap is what? A lower time frame cycle sequential SMT, which we did have here, right? That did occur here. If we, for example, go down to the 15-minute time frame, and remember, for the well, for the forward time frame, and this is something that well, not recently, but we taught here. The forward time frame, right, for it to be effective, you need the 15-minute time frame, right? And here we had what? The high forming where within the gap, here price didn't have to go into that gap. Why? Because first of all, this already did. And what else? This is sequential SMT, right? So literally, it's just I don't know. I think that it's at the point where I see so much of you guys, sharing these things beforehand, and at times it might seem that I don't see, but it's just that it should be normal right now that you can see these things, and they just keep repeating themselves. So yeah, here we have price straight above this high, and what happened? Then we had price just completely fall, right? And this was the base of everything. So trade the forward gap. There was SMT fill here, right? This is where the reversal come in. This is where price had the go ahead to drop. And if you realize before price drops, we had accumulation right here, right? And another thing to pay attention to is that this, right, to before price broke down to a what would I say? Just to retail minded people, this would have been a bull flag, right? They would expect bull flag right here, and that is something else that always gives away the move. So we had sequential SMT here, right? Price was above the true open of the day. Then we had a false bull flag, and price traded into a 4-hour gap. This is the 15-minute time frame. So the 15-minute time frame will be reactive to 4-hour gaps, just as how the 1-minute time frame will be reactive to 15-minute gaps, right? So price cleared the liquidity here, false bull flag above true open, sequential SMT, and it fell. So this is something that you could put into your reservoir, or your trading resources, your arsenal, right? And another thing to realize is here, right, we had the, let's call this just the uninitiated, sequential or SMT, because this is not real SMT, right? This is, what we aim for, which is either, follows SMT or equal highs or lows. So here, you see what? This is liquidity. Here, this is sequential SMT. Price failed to, trade into the gap, which showed weakness. Afterwards, we just fell and cleared these lows, of this low more, particular. So what you can see here is a sequence that happens. First, we had this right here that tricks everyone, right? This fake SMT, right? Oh, this is SMT, and this is why everyone, usually says that, oh, SMT doesn't work. SMT always fails. SMT just, it just doesn't work. On you're using the wrong one. They're using the wrong one. This SMT isn't real. Of course, they couldn't just have the real one there. They had to put something, that's fake, that's false, that imitates this, right? So we had the false SMT, right? Price was trading higher. This expansion right here, right? Which took out this high, and the telltale sign of the reversal will literally be this consolidation right here. So once you start seeing price consolidating like this, right? If you're afraid to, go short here, and you see price consolidating like this, and this is very good for day trades. So this is the 15-minute time frame, right? And you have a handful of these that form over the week. You don't necessarily need a triad for this to work. You can use the euro and the Great British pound, or you can use silver and gold, or you can use Bitcoin and Ethereum, or you can just use you know the S&P 500 and Nasdaq. So again, this is the pattern, right? And right here we have what? If you realize we have price making a higher low, then we have a higher high here, right? And here what we have? Lower low, lower high. So this is mirrored here, right? But in terms of the highs and lows, liquidity that's being ran, it's the opposite. So we didn't take sell side here, we took sell side here. And this was not sequential, which is important, right? So let me just put this here. Oh, sorry about that. So let me just put this here. All right, so this was not sequential, right? Here, not sequential. And whenever you see SMT that's not sequential, just assume that it's fake, right? This is just, price pulling back to, get the liquidity to, commence its actual move, right? And then you can see that the true open was here. Price ran above this high, and the only time when you should, be focusing on true open, and I've never really said this before, I'm not sure if I did, is when we have sequential SMT. Okay, right here, this is just one sequential SMT, and do you guys remember why this? We would use this because we have an SMT fill. This is the four-hour gap, right? And then we have sequential SMT here on what? The daily, within the daily cycle. So 4-hour gap, sequential SMT within the daily cycle, and don't forget this, where we have SMT here, but it's not sequential. So this would be the advanced version of the market maker sell model, right? And it's very effective. I'm hopefully we see more like this so we can do it live. But it's definitely something that worth your time. Here, right? You could enter anywhere here once you see consolidation, right? And what else is here? What else is here? You can see that right here, the high that made, right, this high right here, which was the high today, right? We had this consolidation within this candle, right? The consolidation, here for the Nasdaq did not happen within the candle, right? Whereas here did happen right here, right? Which is something else that you should, be paying attention to. Right here we had price. Remember, wicks were gaps. Price just, was within this gap right here, whereas we didn't have a gap right here that was formed. Right, and this is what I mean by when you have S&P that's not sequential, we look at it as what? A actual market structure shift. Right, so here you'll see, okay, price failed to break below this low, broke below this low. It's not sequential SMT, it's going up. I'm not excited. That's a market structure shift. No, we wait for price to go above true open. And for the 15-minute time frame, you need a true day open and you need a 4 hour time frame, right? For the 1 hour time frame, you need a 2 week open and what? And the daily time frame gap. And this is something that, repeats everywhere. And it's simple. You need to have SMT fill, then, you know, sequential SMT is needed. But in the actual sequence, it is here when you start at the actual lows, which is, something that many, just wouldn't be able to, predict or see before it actually happened, right? And you're actually just using two assets here. So it's literally once you have S&P that's not sequential, you expect price to come back below. Even if when this candle is going up, you're looking for the terminus. You're looking for where price might reverse. And once you have this, afterwards you have price push above this high, right here a little bit, right? Causes sequential SMT. You wait for price to react to a gap, and you wait for this gap to just not be filled. And once you see price, begin to, form a bull flag, that's your, that's when you should, get ready to short or long if it's a, bear flag and we have the opposite happening here. And this is something, that I think is very good. I was going to make, well, I don't know. I want to help the people that just can't afford anything. Just give them just one setup, right? Just something that can help them for the times that are coming, something that they can, even if they end up blowing, a funded account or something, have them just make some money before the fact. Because nothing really out there, I don't know if it's that Michael teaches things so difficult and he's just, I don't know, just too difficult. It's just more easy to just give everything as it is, right? But yeah, I hope that you found this insightful. And we will be back this Wednesday at 6 p.m., right? Hopefully the market gets, clearer. Whereas, we could come back, call some moves live and, just, have fun participating, in the market together. And with that being said, have a wonderful day.